Here is the midnight New York local time candle on the 15-minute time frame. Opening price is here, extended out throughout the day. That is your midnight New York candle opening price. Preferably, if we're selling short, we want to see price trade above this opening price. This is where smart money is accumulating short positions. So the algorithm goes higher, once more higher, and then again right here, and then begins its descent into the daily range low. Now what's occurring here, this is not buying and selling pressure. The algorithm is offering constantly price above this opening price. Now every single time it rallies up, just because it does that doesn't necessarily mean that's a time for you to get in. But when you couple that with time of day and price, it becomes a lot better. Notice we have an imbalance in here. So the fair value gap there and price runs up during the New York open kill zone. This specific time of day between 7 o'clock in the morning New York time to 10 o'clock in the morning. This is specific to Forex. If you're going to trade an index, don't worry about that. You can work with the 8:30 to 11 o'clock New York local time. But for Forex, the algorithm is going to operate on these specific elements of time. So if we're looking at this imbalance here, the market runs up and it overshoots the imbalance a little bit, but what's it really go to? The last up close candle, which is a bearish order block. How do we know it's a bearish order block? Because we have the imbalance here and it's trading back up into after a nice move lower. So this displacement, fair value gap, last up close candle, touches it, there's your bearish order block. Dropping down into a 5-minute chart, that's that order block here. So everything underneath this end of the trend line here and below this part of it, this all is during the New York open kill zone. So you're hunting your setup for Forex pairs within that little block of time. What price are you looking for? Preferably at or just above the opening price at midnight. If you are a New York session trader, you want to refer to the opening price at midnight, but then you want to recalibrate at 8:30. Looking at this particular day on the economic calendar, we had a high impact news driver at 10 o'clock in the morning. It was the ISM services PMI number. What I'm expecting is the volatility in the marketplace at or around these specific times, because the algorithm is going to use that injection of volatility to facilitate trades. Now, is it trying to give you good trades? No. It's trying to move and rebook and reprice to levels to allow those in the know to participate. So that little bracket of time right there on a 5-minute chart, you're hunting your setup. What is the thresholds that make it high probability? Well, if you're going short or looking to go short, you want to be above the midnight opening price. That's here, extended out in time. But now once we hit this order block here, that was during the early stages of the New York Open, right around the 7 o'clock hour. The market drops and then retraces back into that news driver here at 10. So what's happening here is look closely with this swing low. It went below this low here and then it rallied back up once more above the opening price at midnight. Does it take out this high? No. Why doesn't it take out this high? Because it has an imbalance here. That imbalance tells you this is an intermediate term high. If we're bearish, it shouldn't take this high out. An imbalance or a fair value gap associated with a swing high or swing low. In this case, this is an intermediate term high. Not because it just simply has an imbalance, but because the narrative is we're expecting lower prices and it went above the opening price at midnight, and the imbalance there when it retraces back up into this fake run ahead of the news driver at 10 o'clock, the news, if you will. This movement here is only running right back up into the bearish order block. So this return into that order block sets the stage for another move lower. We get a swing high. So we have 3 candles making a swing high. So we start looking for displacement and movement lower. But looking closer, after we had that shift in market structure here on a 5-minute chart, it retraces back up, fair value gap, bearish order block, and news. This is the wild card. Okay, when you have high impact news drivers, this is going to many times scare you out of the trade or stop you out. In other words, if you went short back here and you started trailing your stop loss, this is what that's designed to do, take you out. So if you're short back here or here or here, how are you protecting the trade? You're putting a buy stop above recent swing highs. So they're jamming it up against that, back above the opening price, because your buy stop is going to flood the market with buyers willing to pay at a higher price than it was here before it runs higher. And you're going to buy, or those individuals that had those stops, they're going to buy the counterparty side of the smart money that wants to sell short, because every buyer has to have a seller, every seller has to have a buyer. So that's what's occurring here. But inside this shaded area, I'm going to show you how this model is applicable here in FX. So here's the 4-minute chart. We were just looking at 5. So we start stripping down this price leg here. And we're looking for any fair value gap. This candle's low, this candle's high, there's your fair value gap. Isn't it interesting how this goes right up into there, closes that in, then and only then the market starts to aggressively run below the short-term low here and then reaching into our objective down here at that 109 big figure. Now, for all of you raw dogs out there, okay, this is too much, Michael. You're overcomplicating it. You're confusing me, Michael. You're talking about the midnight candle for the opening price, and now you're talking about the 8:30. Which one do I use? Why do I use it? This, that, and thing. All right. If you're going to be trading FX, you're going to be using the 8:30 in the morning for New York session trades, but refer to the New York open at midnight as well. If the opening price is lower at the 8:30 than that of the opening price at midnight, use the lower one. Reason why is you want to set the minimum threshold for a Judas swing or a market protraction to the upside when you're bearish.